Well, good evening and welcome, everybody. My name is David True, and some of you who attended a NYPAY event before might know me. Those of you who haven't, I'm the president of NYPAY, and we do these events. We try to do them about once a month. And this month, we have the good fortune to be working with the New York League of Independent Bankers to host this event on banks and fintechs. And with that, I would like to turn over the microphone to Ed Lutz, who's the head of the New York League of Independent Bankers.
Thank you, David. Very nice to be with all of you tonight. I'm the president of NYLIB, and we're an organization that represents a number of community banks in the larger New York area. We're delighted to be co-sponsoring this with the NYPAY people. It's the first time we've done this kind of a program. We think it's timely. We have a distinguished panel that is going to talk about fintechs. And we think this is particularly important for our constituency as the financial landscape continues to evolve and technology continues to bear upon the banking business. And banks can partner with fintech companies in meeting some of the demands of their customers. So with that as an introduction, I'm going to turn this over to Jeff Alberts, who's a partner with Pryor Cashman, who will be the moderator of the panel and will make the introductions. And we wish you all well. Hope we have a good program for you. Thank you.
Thank you, Ed. So my name is Jeffrey Alberts. I work at a law firm, Pryor Cashman, and we happen to represent both banks and fintech companies. So I'm super excited about this event because it's interesting. A lot of times when you talk to banks, they have a very different perspective on what fintechs have to offer than fintechs do. They have a different background. They all often are focused on different issues. So this should be a great opportunity to have a real open discussion. And rather than summarize who everybody is, I'm just going to pass this off to each of the panelists to describe their background and what they bring to this conversation. So why don't we start off with Grace Pace.
Hi, everyone. Grace Pace. I'm the SVP of Digital Banking at Quantic Bank. I have sort of grown up in banking, I like to say. So I stumbled into it as a first job out of college and I've stayed in it ever since. Served in a variety of roles, whether it be in marketing, IT, products and platforms, and happy to be here and talk about exciting fintech API information.
And Jeff, can you introduce yourself?
Sure, I'm Jeff Keltner. I'm the SVP of Business Development at Upstart. Upstart's an AI-powered lending platform that partners with banks and credit unions to kind of power consumer lending technologies. One of our partners here, Keith, is on the phone, so we worked with Cross River for a long time. I came to fintech from technology. I spent first couple of years of my career at IBM, and then I was at Google and what is now Google Cloud before it was called Google Cloud, and indeed before we called it the cloud, kind of before we came up with that term. So really, I guess, giving you the tech side of the fintech perspective on these topics.
Keith?
Yeah, so I'm Keith Vander, Leest. I lead the payments team here at Cross River. I've been at Cross River about 2 years, and for you that don't know Cross River, we are a bank, but we also are a tech company. So we're kind of the combination of a fintech and a bank. Prior to Cross River, I was at American Express for a number of years. I was both on the issuing side there and the acquiring side at American Express. Prior to American Express, as a First Data, I joined First Data out of business school, and they were talking about mobile payments already back then, and I got really intrigued about the world of payments, and yeah, I've been in payments for a long time, and really excited. I've been to a few NYPAY events in the past, and I think this is a great forum.
Great. So before we get started, I just want to make sure that everyone who is not a panelist should put themselves on mute and turn off their cameras. And the first thing that we want to talk about a little bit is APIs. So I'm a lawyer. I probably know the very least about APIs of anybody here, but I know API is an application programming interface. And my understanding is that it basically is something that allows banks, computer systems to interact with the computer systems of fintech companies. And I don't know that much beyond that. So I was hoping that maybe, Jeff, you could talk a little bit about, what exactly an API is and how banks make use of APIs to interact with fintech companies.
I mean, you nailed it right there. I mean, you got it all nailed. An API is a pretty simple construct, right? It's a programmatic way for two systems to speak to each other without a human sitting in the middle. And so, as a simple example, in my world, I work with banks to process loans. When we first worked with Keith, we would send like a handful of files every day on an FTP server, and some poor schmuck at CRB would open up the files and put them in some system to make sure ACHs went out and do manual processing. And now we have an API integration, so I can automate that whole process. The data can go directly into their systems. We can automate distributions, collections, whatever it might be. And I think there's so many use cases for that, because really, how many, I often kind of say, if you can have a trained monkey do something, it should be automated. And how many things are trained monkeys interacting with some external system? And then, I'm not trying to belittle bank employees, but they're doing a very rote, repetitive job in kind of interfacing that data into systems, whether it's bringing data into marketing or bringing data into a CRM or processing certain kinds of transactions. So all of those are instances where two systems could directly integrate without a person in the middle through an API. And there's dozens of use cases for where that could come into play between a bank, a fintech, or frankly, a bank and any technology system that they're using.
I've talked to a lot of bankers about APIs, and a lot of times the first question I get is, what's an API and do we have them? We didn't know we had any APIs. So I guess that's a question I'd kind of toss back to you, Jeff. If you're a bank, is every bank already ready to make use of APIs, or is there some type of additional work that banks have to do before they start making use of APIs?
Probably yes. That's maybe a better question for the bankers on the call than for me. But almost every system, if you're using a core system from one of the major providers, they almost undoubtedly have API connectivity points that you can connect various systems into, right? If you're using a Salesforce CRM, there are API endpoints where you can connect a marketing system or a loan origination system or a core system into your CRM. So those things are out there. Now, some people, and maybe you can talk to this, build their own APIs where they have kind of a system they would like to expose to partners. And there may be very specific integrations, but there are almost certainly systems that you're using today that have APIs available to be integrated to one another or to third parties you're using. That's almost certainly something that is available to those banks, whether they're using them today or not.
Yeah, you're right, Jeff. We at Crossover, we built our own core. We were using another bank core from one of the providers out there, and it couldn't do some of the things that we needed to do. So we decided to build our own bank core. It's all API first. So we've got a team of developers. I would say if a bank wants to make APIs available, they should definitely look to hire at least some people who know a little bit about development and can write some code. But we have a team in Israel that built our bank core, and they're constantly adding and maintaining the APIs. So we build over time, and I think any bank out there, you don't need to start big. Start small with some basic payments or some basic features that you want to make available to your clients in a digital manner via API, and build off of that.
So great. I know you've worked at a few different institutions, and you're kind of looking at it from the opposite angle from Jeff. What do you have thoughts on? What a small bank or a branch of a foreign bank that is looking to start making use of APIs to interact with fintech platforms, what are some of the very first things that you think a bank should do?
Yeah, so as Jeff mentioned, oftentimes there are APIs available just using the third parties that that the bank already has, like a core system or a CRM. But I think the first step is to really take an inventory of, do we have people on staff that understand the APIs, or would we need to rely on the third party? Do our systems have APIs? They likely do, but it's important to check. And also define a strategy of, is the bank trying to develop a set of APIs to interact externally, like as a banking as a service play, or are we leveraging APIs internally to enable a certain service, with our current customer base, or to share data between systems? I think oftentimes banks have many systems that often don't talk to each other, right? And so sometimes that's like the first use case is, how accessible is my data? And does it live in a place that's consolidated, or is it everywhere? Because you're going to need an accessible data feed to interact with any third parties, or to provide a banking as a service offering.
You mentioned a banking as a service play, which sounds really cool. What is a banking as a service play?
So this would be when a bank would provide a service to a fintech, let's say. So if a fintech wants to get into the payment space, and we already have as a bank, a payment processor, and we can handle all of the banking processes in the back end, then they can sort of establish the front end and leverage our experience and systems. And so in order to do that, we would need a way for them to communicate. So the bank would need a layer that the fintech or partner can communicate with easily and frequently.
And so Keith, I guess the next question that kind of comes to mind, and I've seen a lot of bankers get intimidated by this next stage, is after you've thought about where you are with your API systems and whether or not that's something that is even potentially feasible for you as a financial institution, you're often confronted with a bunch of different fintech companies that want to do different things. And bankers are often risk averse, and the regulators are also risk averse. And it's hard to evaluate when you're doing this for the first time, what you should be looking for in a fintech company. So I guess that's a question that I have for you is, when a bank is first starting to interact with fintech companies, either because it reaches out or because fintech companies approach it, what are some of the questions that a bank should be asking that fintech company to ensure that it's going to be a profitable partnership for both of them?
Yeah, we're constantly asking ourselves that question and trying to figure out, what is our strategy with working with our partners, with fintechs. Some of the things that we've looked at in the past are, the experience of the team at the fintech. Do they know whatever they're trying to do? What experience do they have? If it's a startup, what have the founders done before? If it's a more established company, what is their strategy, and how can we as Cross River or the bank help them? We look at funding, and then we look at, what are we comfortable from a risk perspective, right? I do think each bank has to define their risk appetite and understand their strategy as it relates to that, and maybe pick some verticals that you think there's a good opportunity, understand how that vertical fits with your overall strategy, and then figure out what the fintechs working in that vertical need and how you can help them. So it is something that I don't know if there's a magic answer to that question. The thing that I've seen a lot is with fintechs, there's a lot of focus on the tech, but not a lot of focus on the financial services, right? So oftentimes what we end up doing, I think Grace was kind of alluding to this, is we have to educate them on the regulatory and compliance components of what they're trying to do. They get the technology, and if you're doing it via APIs, it's pretty straightforward and easy to use. So they think, we know what we're doing, and they do from a technology perspective. But the thing that I most often come across is they don't understand BSA AML, they don't understand OVAC, they don't understand the alphabet soup of banking regulation, and so we spend a lot of time talking to them about that, and we work with a number of consultants that we refer their way to help them if they really are starting from scratch from a compliance perspective.
When you're exploring, what their understanding level is of regulatory issues like the Secrecy Act or anti-money laundering issues, what are some of the initial questions that you ask just to figure out whether or not, their fintech system will be compatible with your, what you have to do on the regulatory side?
Ask them if they know what BSA stands for.
Okay, all right.
Ask them, if they've ever heard of the 5 pillars, those types of things. Ask them if there's any sort of international flows. Ask them, how are you going to comply with the travel rule? And you kind of pretty quickly, if they give you a blank stare, then it's like, okay, well, let me step back. And again, it's a lot of education. So it's depending on their background, sometimes it takes a little bit longer.
Maybe a piece of advice I would throw in there too, Keith, is it's not just asking a person, say, do you understand what BSA is, AML is, KYC is? Sure. I think a lot of times I see banks looking for a document like, show me your BSA policy. I don't have one. That's a problem right now.
Mm-hmm.
And when I provide it to you, you may go, well, Jeff, have you thought about, this issue on this section, or how are you handling this? Or I've got a fraud policy, KYC. How are you handling synthetic identity? Have you seen an uptick in that? You might be looking for a little more intelligent response, but just at the beginning of, are these documents that have been prepared, good sign? Or is this somebody going, I don't know, but I read a little bit about this and I'm gonna try and give you some smart answers, probably bad sign, right? And you'll see the spectrum, but I think the more you find a fintech that is coming in with like, when we go to partners now, I don't even wait for Keith to say, what's your BSA? Like, here, I know you're going to need some stuff from me to get comfortable. Here's all the stuff I've got. You don't even have to ask me for it. I'm going to give you the list of like, and we won't do this on the first date, right? Like we're having a meeting about the business. We're not going to do this, but I'll say, when it's time, I've got a list of documents that are going to be available to you. You can look through that list and get a pretty good sense that these guys have the things I would expect. And then there's a deeper point where you're actually looking at the content and asking tough questions. But I think looking for that documentation and preparation of documentation that indicates an understanding of the requirements that the banking partner is going to be under is a pretty good indicator of how well thought through any approach might be by the fintech to regulated segments.
Right.
Sorry, Jeff, I was going to say, I think that it's a mindset too for the bank. So if the bank wants to interact with a fintech, and let's say it's a brand new fintech, banks are traditionally ready, like you said, to ask for the package of, I need your SOC report and all this stuff. You have a whole vendor due diligence, protocol. And I think there has to be a mindset shift of being willing to work with fintech a bit. And maybe they don't have it, completely formalized, but they do have a lot of the key components, and you have to sort of help them shape it. And I've also seen a handful of, fintech incubators out there. And I think it's funny, but it's important, and it makes sense that those have come to existence, because you almost need a group to sort of shake out the fintech before it tries to walk into a bank, because I think bankers are known to sort of shut it down really quick. And they sort of need to do that due diligence before they're ready to get a bank signature on any sort of deal or partnership.
When you say fintech incubator, what type of incubator are you talking about?
I know that ICBA has, ICBA has an innovation group where, a fintech can come in and present in front of a panel of traditional, bankers that have been in the business, and present sort of like Shark Tank, present their idea, talk through it, try to work out any potential red flags, roadblocks, and get feedback from those that have been in the industry longer than they have.
There's also like the card networks have different programs. Visa's called the Fintech Fast Track program. There's also more commercial programs for smaller startups, where it's a very defined box of what is allowed. But it is good for a brand new startup to maybe test out their business model to see if there's traction before they go to, directly to a bank or a bank like Cross River and say, hey, this is what I want to do. those, I call them graduates from those types of programs are really good because, they at least know a little bit about what they need to do from a compliance perspective. And they've proven their model and they're ready to really scale. Those are the really good ones for crossover.
And is there anything that's analogous to that is available to smaller banks? Because I know the New York League of Independent Bankers, a lot of its members are relatively small community banks in the New York City area. And as much as they're hearing, we should be asking all of these probing questions, they may be able to ask the probing questions on regulatory issues, but it might be harder for them to ask all the questions they should that have to do with things like APIs and how often APIs should be updated and whether or not there are technical issues that they're not anticipating. Are there resources for a bank that wants to try to get up to speed on this before they just go out and start interacting with fintech companies?
I know that, so clearly there's a big need for this and there's a lot that goes into it. I know that I think it was Mountain Valley Bank launched Victor, which is a platform that basically does all of the fintech, onboarding and due diligence. And to me, that sort of speaks volumes that there was actually a solution built out there to do all of this because not everyone has that in-house talent or understanding. But I know you can also leverage consultants, and there's a lot of resources as this has become such a popular topic in the industry.
Yeah, I think also, one of the things we haven't really talked about tonight, but there's different kinds of relationships between fintechs and banks. Frankly, there are, I think, some where the bank is buying services from a fintech to a loan origination system, a marketing system, a fraud protection, whatever, a system that's going to help the bank in its core business. And there's other places where, in some ways, the bank is asking for services, or the fintech is asking for services from the bank. In the second type, it's a little harder, right? Because often the fintech will have one, maybe two bank partners that they're working with, and you're going to be involved earlier stage in helping define and get something off the ground. In the former, in my first example, this is something where fintech is partnering with lots of banks, right? So you're going to have a lot more resources. The American Bankers Association has kind of a preferred partners list where people come in and there's some vetting that goes on, having been through some of that process. I ask a lot of clients, I want to see your SOC report. For what? My banks want to see the SOC report, but why do you need to see it? So they're doing some of that high level diligence. I think CBA has a similar process. So there are places like that, but again, that's going to make more sense in the case where you're working with a fintech that has multiple relationships with different banks. For a lot of CRB's relationships, they're really the only bank partner for that fintech. And in that case, you're probably going to need more experience on that. There's not going to be somebody who's been through that or wants to do the diligence on that fintech, and they may not have a package ready for you yet because they're there. So I think every bank, as they think about how they're engaging with fintech, there's this kind of spectrum between sole partner, kind of taking something to market together, and almost buying a service from a fintech to help me with a business process. And your approach will be very different depending on where you are in those, because their maturity in this area will probably be quite different as well. We work with over 40 banks at this point, and that's a lot of diligence processes we've been through. We got a pretty good approach. Right. The first bank we worked with was Cross River, and we did not have nearly as good approach the first time because we were learning along the way. And so I think every bank as they're looking at it needs to think where in that life cycle do I want to live? What kinds of fintechs does that make a good partner for me in different areas? And that may vary based on how comfortable you are doing your own diligence and not.
Right. So it sounds like for the category that you were talking about initially, where you're talking about a bank may just be looking for technology to assist it in processes it already had. That's probably something that's easier for a bank to get their head around because they've seen the problem already and they're looking for a solution. For the other category where they potentially are going to be approached by fintech companies that will be looking to make use of the bank's both technology platform and access to certain types of payments abilities and things like that. What are the main categories of fintech companies that can reach out to banks? Okay. And what's potentially most appropriate for a smaller bank as opposed to a much larger bank?
Oh, Keith, you want to take that? You guys are in that. You guys have a lot more types of partnerships than I do.
Yeah, going back to what I said before is because you do see such a wide array of fintechs who are trying to solve really archaic payment practices that we've all seen. I think anytime I see a paper check, insurance, or when you're closing on a home, you bring a cashier check. Like there's a opportunity for a fintech to come in and apply some technology and to improve this process. So for a bank, I think it's trying to understand what your risk appetite is and what types of services that you can bring to bear in a certain vertical or in a certain area that you want to play. It is something, I think of payroll, I think of insurance, I think of a lot of B2B industries where there's, again, archaic forms of payments, where if there's people who know that industry, they can work with a bank to really innovate and create great solutions that will just take off. And then the bank is there to support that fintech. So yeah.
You mentioned high risk. Grace, have you interacted with fintech companies that seem particularly high risk or particularly low risk? Because I think there's a lot of banks that would be interested in just getting a better sense of what categories of fintechs fall into, where they fall on that spectrum of high risk versus low risk.
Sure. I think, depending on what the service is, defines the risk in some way. So anytime you're sharing data, there's risk, right? And then depending on how much data you're sharing and what kind of data, to me, that would define like a more risky partner. So if it's something like account opening or payments where I'm seeing a full pan of a card and that kind of thing, that might be a more risky partnership than, something like running the rails for a debit card or a credit card that wants a fintech that wants to have a credit card and they need a bank to, basically run the transactions through. I think also depending on how long the fintech's been around, right? So I think the word fintech, we all think like brand new startup, but this has been around for a bit now. We're kind of pretty deep into this digital banking world, and there's still a lot more to go. But I think that if you're looking at a fintech that's been around for a while, has plenty of bank customers, has been there, done that, that might be a good place to start in terms of a smaller bank that isn't quite sure about their risk appetite but wants to, enable a fintech service.
And we've all been talking as if the bank, everyone is approaching the bank and the bank is just sitting back making decisions and asking all these tough questions and making people like Jeff come up with these incredible sets of documents so that they can pass scrutiny. But it's a two-way street. I mean, fintechs they're asking questions of banks, and the fintechs want to know, whether the bank is appropriate. So I'm interested, Jeff, in hearing, after you've shown your incredible collection of documents and answered all the questions that the bank has, what are some questions that you have for the banks to figure out whether they're appropriate for you?
Well, I'll say we do that before. We go through that in-depth diligence. I think it's really important that you get alignment on business objectives and kind of a cultural fit and a fit and approach before you spend a lot of time delving into detailed compliance, regulatory questions, and due diligence. While that's important, it's a lot of work on both sides, and you want to make sure that the alignment is there. Again, I would go back to these kind of, it depends a little bit on this kind of like my primary. If you're the bank powering my credit card program, or if I'm selling a fraud prevention software that lots of banks are using, it's a little different. In the kind of simpler version where a bank is really buying a set of services, you're really looking for, is there a defined business needs, kind of a standard sales thing? Is there a defined business need? Is there ability to kind of solve that business need with my technology? And is there someone at the bank who cares about solving this? Because there's a lot of problems that are nobody at the bank really owns. And that can be really frustrating for a technology place. I got a great solution, but nobody cares. On the other side, I think, particularly where you're looking at one or more, one or a small number of partners, one of the things I think it becomes really important, and we've kind of talked about this a little bit, Grace mentioned it, is the flexibility of the partner. Because while it's true that there's a lot of regulatory scrutiny placed on the bank, and the bank is going to have to make sure that the fintech is living up to certain standards, it's also true that, let's just take KYC as an example. The fintech probably has a slightly different approach than what you did in your mortgage business for the last 30 years on verifying identity. And if you're going to come to that fintech and go, no, you got to follow the playbook that we have, because that's how it works. It means the person's got to come into the branch and show a photo ID to a person. Like, well, that's probably not going to work. And that's an over-exaggerated example, obviously. But I do think the general statement of is the bank looking for ways to help you fit within what you're trying to do and get to a yes, or get to a system that works? Or is the bank trying to say, hey, we've got a way that we do this and you're going to have to do it our way, or it's not going to work? That's always a give and take, but that's one of the key things we look for, because every fintech is going to come with a slightly different take. And frankly, and Keith knows this from our experience, there'll be shifts in that over time. We'll go, hey, we get it. We found a new thing to do for KYC that we think is going to really make it easier for customers. Can you be flexible in evaluating that, looking at the risk, kind of talking through the fintech and going, yeah, we're okay, maybe using this new approach and changing the what we're doing. And fintechs are going to move faster, right? They're going to change policies and approaches every month or 2 or 3, right? They're going to have some new thing they want to try. And we're always looking for banks that are willing to kind of really take a look at the risks and judge those on the face of it, not kind of based on old standards, and are willing to be adaptable to what we need. And that's really important, because it's a pretty deep relationship. It's a lot of give and take and back and forth. And we want to feel like there's a real partnership in that, as opposed to a kind of, hey, this is just what the regulations say, we got to do this. And like that, that's going to be really hard for most fintechs to work with. And that's what makes, the really good bank partners stand out.
Yeah, I would say to the risk point, it's really important, because oftentimes the fintechs are solving things that were broken in the past, and the regulations and the rules were written, they're always behind the times, right? So the bank needs to understand that, okay, they need to have the knowledge of regulation and the rules, thinking about the card networks, but then those, when you as the bank talking to the fintech, the bank needs to understand, okay, now how do I apply this with this new business model that has never existed before? So it's a combination of knowledge, deep knowledge around payments and banking, and then truly understanding the fintech and the problem that they're trying to solve and what their new business model is, and how do you fit the rules into that new business model. The other thing I would say that a fintech should really take into consideration when evaluating the bank is their technology. So what are the offerings that they're offering via API, right? Is it ACH? Is it RTP? Is it the DDAs? Is it checking savings accounts? Like what is the technology that you're getting, and is it scalable? Is it robust? Can you stress test it? How many transactions per second can that API actually handle? Because there's and I'm not a tech person really, but there's different degrees of APIs when it comes to handling high volume, high scale transactions. And that is something that, depending on your business model, the benefit of an API is you can do a lot of things really fast, as long as that technology actually is there.
I mean, the API, just so everybody gets it, it's just the language that the two ends speak. And you go, we can speak the same language. Great. But to Keith's point, if you're on the card network, you have certain latency times. Like, how long does it take to get an answer? In some instances, it can take 10 seconds to get an answer. Now, I wouldn't tell Visa that was the answer, because they're not going to be very happy with that as a response time, right? So how many transactions can you handle? Obviously, Bitcoin's going through a problem where can't handle that many transactions a minute. And credit cards, you need to do a lot. In certain other instances, it may be a pretty low number. And so you do need to find that fit between the capabilities. The API is not like a guarantee that it's going to work. It's a connection mechanism that can be made to work. And then it's a question of do you have the fit? And I think it's a great point you make. And you can take it back to if you're a bank looking to get into the space, what is the technology stack you have that is well API enabled and would allow you to partner? And that probably tells you the kinds of fintechs. Like if you're not on the RTP network, well, let's not go down that kind of path. That's fintechs that need that are not a good fit for me. But if I've got a great ACH process, right? Lending is mostly done over ACH today. And so you could say, hey, that's a good fit. People who are looking at transfers, maybe payroll done through ACH or point of sale financing, right? Where I've got just ACHs is my thing and I've got a really good process. Hey, that's maybe the kind of fintech that's going to fit for me. So looking at that technology infrastructure as, what the fintech is going to look for is, do you have the infrastructure for me? You can probably figure out what kinds of fintechs you will have the infrastructure to support well and focus on relationships with those versus areas where there's going to be a net new engineering process to build some API on top of a legacy system to try and make something work.
I think just figuring out how accessible, your systems are as a bank, like being realistic about how quickly you can provide that information so that the partner can ingest it.
Right. So one thing that I think there was a reference to this earlier, and I've also experienced it with clients that I deal with, is that there's often a circumstance where one fintech company will have partnerships with multiple different banks. And I experience that often when handling a regulatory issue where the fintech company is saying, that's not an issue for somebody else, or that is an issue for somebody else. But I imagine there's all kinds of different ways in which the fact that a fintech is working with a number of different banks can implicate how they interact with those banks. And so I'm wondering, Keith, is that something that you have experienced? And are there issues that come out of that where the fintech company is asking you to do something that you either don't think is possible for practical reasons or regulatory reasons, and they say other banks do it differently, and you have to deal with figuring out whether that's true or respond in some way to what the fintech is saying?
Yeah, I mean, we see it often that the fintech has think about the bank as the supplier, right? And so from a supplier strategy, you want to have multiple suppliers, not all your eggs in one basket. So we see that a lot. Sometimes it is based off of the bank's risk appetite. And then other times it's based off of the technology that one bank can offer and the other bank can't. We also see it, different settlement windows, sometimes economics come into play. There's a wide variety of reasons that a fintech will work with multiple banks. And, obviously at Cross River, we think we can be the one-stop shop, but we understand that, for certain reasons, you want to work with a different bank, and we see that all the time. It's very common.
Nothing personal.
Yes, exactly. We're not offended. Our approach is always like, all right, that's fine. Even if they approach us and they say, hey, we're working with XYZ bank and we're looking for a backup bank. We don't know how much business we're going to run through. And I'm like, that's fine. Like, we'll be your backup bank, and I'm confident that over time you will see that our capabilities, our technology, you'll want to switch us to your primary bank and have your primary bank be your secondary bank. So
yeah, I would just say any fintech that reaches a certain size and scale is going to feel the need to have multiple partners, because it's just like when you go to equity investors and they go, so what happens if this bank decides they don't want to work with you anymore? You go, well, we have no business, and it'll take us 9 months to stand up another relationship. They go, I mean, you're a lawyer, Jeff. Like, that is not a thing you want to put in a prospectus. Right? Like that's bad. And so most fintechs, when they start 2 bank relationships, too much headache. I can't do that. Right? It's gonna kill me from an overhead point of view. At a certain scale, it's almost crazy not to. And then you do have interesting questions where risk appetites or perspectives are, as I said, like maybe it's a KYC policy and a new automated technique you want to use, and one bank says yes and one bank says no, and then fintech stuck in the middle. And that's where you'll find these really interesting negotiations between the fintech and the bank going, well, Joe over there said he thought it was fine. Why do you not think that? And it gets to be,
we get that a lot. We get that a lot. We're like, well, this bank does this. We're like, well, we do it a little bit different. I would say
it's a give and take. Yeah.
It does depend on the product, right? So switching costs are higher for a card program, right? Because you've got the BIN, and it's like you can't just, all right, I'm going to now switch all my cards to this bank. Other products, ACH, RTP, it's maybe a little bit easier to switch. So that is something that the fintechs should be thinking about: is what is the product, and if I need to switch, how easy is it to switch bank providers?
Yeah, I think I probably see this a little bit in a different way than all of you do, because I'm often in a situation where I'm either representing a fintech company or representing a bank that is receiving an inquiry from a regulator, and a regulator is saying, well, under the Bank Secrecy Act, you're not allowed to do this, or you're not allowed to let your third-party service provider do this aspect of your overall bank process. And the fintech company is often like, well, we're dealing with 6 other banks. They have a different regulator, and all of those regulators say that it's okay. And so then you're in the situation where you're going back to the regulator and saying, I don't know, the other regulators think it's okay for this reason. And so that can be an interesting negotiation as well.
It'll be a fun. We've seen it all the way to I won't name names, but like it's not just regulator versus regulator. It can literally be at the same regulatory body. One
Sure.
examiner versus another has a different take. The relationship between the bank and the regulator, if there's been an issue in a certain area, the scrutiny on BSA might be higher on one bank, and they may go, I can't do this thing that your other bank does because I've had a consent order or a fine or an issue with my regulator in this area, and I've got a different level of scrutiny placed on that. I've even seen it where it's the same examiner, right? And different banks interpret based on their relationships and history, where it's the same physical person who's at 2 banks, and the bank's interpretation of what that person is telling them about what they can and can't do varies. And you go, man, that's you will find that from your fintech partners telling you, like, I mean, these guys say it's fine. What's the deal? And I think it's a topic that's, I mean, we can't solve that here, but we certainly spend a lot of time going to DC trying to get a little more consistency, not just between regulators, but at least within a regulator in terms of how examiners look. So, if there's something that the FDIC or the OCC or the Fed has kind of thinks is okay, like you should have a consistent set of expectations across the board at different banks, more or less there. And it's not always true. And it leads to some really interesting conversations where nobody will really tell you why they think what they think, but they're very certain that they're right because they had a specific conversation that they can't tell you about.
I think interpretation's the key word, right? Regulations seem very black and white, but every bank interprets them differently. I've seen this a lot, especially with account opening. People are like, well, no, you have to collect these certain documents, but it depends on how your bank wants to interpret it, because there's others that don't.
So we've been talking about all of the opportunities that are there for banks partnering with fintech companies and fintech companies partnering with banks, but my guess is it doesn't always work out perfectly. So I'm curious, I guess, first of all, Jeff, from your perspective, what are some things that can make it go wrong, where a partnership that you have with a bank doesn't work out for some reason? What is the most likely reason that those types of partnerships don't work out from your perspective?
I mean, I think generally you've got pretty good alignment. You can always worry about a shift in strategy, a shift in approach, but I think generally there's so much investment in these kind of partnerships to go through diligence, to get them set up, to make them work, that doesn't happen as often. Obviously, in areas like lending, shifts in the macro environment or shifts in the regulatory environment, both of which we have experienced over the last handful of years, can cause the nature of those partnerships or the viability of those partnerships to shift. That hasn't been something that's directly affected us, but certainly you can imagine those things happening. One of the other ones that's really interesting, and I say this because there's bankers on the phone, is when you as a bank have relationships with multiple fintechs, sometimes we become at risk as a fintech partner because of your relationships with others. And I would call out specifically in this instance, high interest rate lenders. When I've got a bank that's working with people who are lending in the 50, 60, 70% range, because maybe they're in a state with no usury cap, when your regulators or the federal regulators don't like that, and then there's things that happen both ways. And so I think everybody's got to be careful, because those kind of shifts in dynamic and perceived risk, whether that's regulatory risk or macro risk, can really set these things off in the wrong direction. And then obviously, like lack of execution, particularly I would think on the fintech, but if Keith tells me he can handle a certain volume of transactions and then, he can't, and I'm fielding phone calls of people going, how come my transaction didn't go through? Like that's going to cause stress in the relationship. And that's, again, where you've got to do your diligence up front and be prepared for, success for a fintech is growth on a speed and scale that most banks have never encountered, right? Like 100, 200, 500% annual growth. And banks don't even dream of like a couple 100% annual growth, but that happens for a fintech, and they can go from small to quite large in a relatively short order. And so being sure that you're ready to scale with that, because that is definitely a place where you'll start to see stress on the relationship when, if a fintech is seeing a huge amount of consumer demand and the bottleneck in the process is their bank partner that can't execute, like that's going to cause a lot of stress in a relationship.
We've seen that to the shift of strategy, fintechs who, they always pivot, right? And then they're pivoting into something that was not part of their original business plan, and that wasn't what they were onboarded to do. And then either from a risk or a product perspective, we can't support their pivot, and then those never take off. The other thing that we've seen is it goes to lack of strategy or trying to do too much too soon from a fintech perspective. If they're like, I want to be the next Chime, or I want to be the next Revolut, it's like, all right, well, let's start with a basic card program or a basic payments program, and then you can build from that. That's what we've seen with some of the fintechs that never take off with us.
I think too, just depending on the maturity of the bank's technology, it's tough to do a POC, or the POC is too light. And so, it sounds great, everything's looking like it's going to work. And there just are some roadblocks in banking, especially, that if you can't figure that out, or it's not, the systems aren't going to talk, or maybe one of your third party systems can't enable something, you're kind of stuck. So I've seen that happen too, where you just weren't able to get far enough down the POC route that it's too late when you realize there's a major issue.
Yeah.
And so are there things that a bank can do to, if a fintech company is considering pivoting for whatever reason, are there ways that a bank can kind of get involved at an early phase so that they can kind of help guide the fintech company towards what pivots are possible or potentially workable within your relationship, rather than them just independently coming up with a...
Yeah, the last thing is every one of us contributes to this. That is where you see this bank culture ecosystem and why it's so important. So there's got to be something else there, right?
I don't know. I didn't quite catch all that. I was going to say, when, one of the things besides the technology that is important that a fintech should consider is, we've kind of talked about this a little bit, but is the relationship, is the partnership, because it is truly a partnership. Does the bank really understand the business model? Are they talking to me on a regular basis? It's not just like, all right, we'll set you up and then we're not going to talk to you until your annual compliance audit. It should be a regular conversation between the bank and the fintech to understand their business and figure out, okay, like, we're not seeing you ramp up on this, the way your projections, why is that? Not that we're gonna, as the bank, gonna tell you how to do customer acquisition or tell you how to do marketing, but that dialogue helps both the bank and the fintech understand, okay, if we do need to change course here, what does that look like? So it's not just like, it's quiet and then all of a sudden the fintech says, hey, now I want to do this, right? So the conversation that the bank has with the fintech, that if it's ongoing, the bank can help coach and guide the fintech to say, okay, this is what we could do, or this is how we could help you pivot into something that works better for you.
So I can tell that there are a lot of people that are on this call that are raring to raise their hand and ask questions. And so we're going to turn things over to Ron Mazursky to raise some of those questions that have been offered by people that are in the audience. Ron, are you there?
Yes. Hi there. Sorry for that. We've had a couple of questions or comments that came in through the chat point, and I think we've had some interesting comments that came in from Jeff Thaler, Michael Flores, and I was wondering if you guys might want to get on and verbally, make your points or ask your questions. Most of them were not questions per se, but merely reinforcing things. So, Jeff or Michael, do you want to unmute? Would you like to say something?
Yeah, Ronald, thanks. I have been in the industry for quite a while, way back to the old IBM core systems and Burroughs core system, if I remember the Burroughs brand. But one of the things, and APIs really aren't that new, they go back several years. But one thing I've seen with particularly the partner is their ability and the ability to react in a timely manner if the interface system, be it a core system, let's take, for example, the loan origination system to the core system. The core system undergoes an update by the core provider. Now, it's incumbent upon the loan origination system to modify that API. And how do they get ahead of that game? What relationship do they have with that core provider to make sure that they're not reacting and that that API is down for a number of days before they can modify it? So I think one of the key questions to ask your provider is, how do you interact with the systems that you're interfacing?
I think
go ahead, Chris.
Grace, did you want to say something? You're on mute.
Sorry, I think I froze up. I was just going to say, if there's not a direct relationship with your core provider and the fintech, let's say, I think it's important for the bank to be a good steward as of like, what is the, what are maintenance windows coming up? What are changes happening? You have to keep an eye on it and communicate that to your fintech partner ahead of time and make sure you're getting them the proper documentation, because when you're reactive there, you can have some serious downtime, especially when you're scrambling to figure out exactly what changed. And I think it's important to have a good understanding of your connection, because you need to know through the core systems, bulletins, let's say they're going to do a change. You need to know which part of that is actually going to affect you, because it's not going to be spelled out. They aren't interacting with this fintech. You have to know what that connection is and know which parts of what they're going to change may affect a service that you're engaged with a fintech for.
Have you found that contract negotiations to include key performance indicators or performance metrics that say certain things have to happen in a timely manner, or there's penalty clauses associated with it?
Yes, I think SLAs are extremely important, especially when it comes to a very important connection, like a core connection or something that you can't do business without for more than an hour, I would say.
That's the second time that a fintech company reaches out to develop a partnership with a bank, they're likely to include those kinds of terms in their SLA. The first time, it's often difficult to predict what can go wrong and what the appropriate metrics would be. So over time, both fintechs and banks get better at specifying those types of performance criteria.
I do see Jeff has his hand raised. Question or comment?
That was more just a comment, just to follow up. But I want to agree and just echo everything that Jeff and Keith Keltner, and Keith have said. I just got into the fintech side with Evolve Bank in the last 10 months or so, mainly to learn all the things that you guys are talking about. And one of the things that I've noticed, in particularly dealing with fintechs that we work with, and I posted a chat comment, is that a lot of them, when you start talking about all the compliance and regulatory aspects that are necessary that we as banks have to deal with, and they talk about their solution, it's an interesting perspective in many cases I've run across, where they're like, well, we're not a bank. We don't have to do those things. And we have to politely remind them, but you want to partner with the bank and you want to utilize our service. And so I hate to tell you this, but those regulations and things do apply to you. And some of the points earlier about which ones are successful early on are those fintechs that have folks who've got some banking background in their organization and understand some of those compliance aspects. And then from the other side, for banks that want to get into it, because I know there are a lot of banks who are starting to think about, how do we get our net interest income side up? Is banking as a service an opportunity for us to do that? It really takes a different mindset on risk appetite. I think Grace, you made that point to some extent, as well as others, and a willingness to really have a different mindset. That the way that we as bankers normally do things and have done things, that if you want to be in this space, you really have to change and be open to working with the fintechs and learning how they're doing it. There's all sorts of ways to validate and verify a customer, for example, than the traditional method that we might use in a normal branch environment. And you've really got to be open to doing that. And so it's not just the technology aspect of really understanding the APIs and do you have that stack, which that certainly is important, but it's also that mindset with the risk appetite and being willing and open to really do things a little bit differently to partner with that fintech. So that's all I wanted to add.
Yeah, and Jeff alluded to this before, but when we look at our fintech partners, depending on the product and the offering, they are becoming an extension of the bank from a regulatory perspective, and that means whatever they do not only impacts them and the bank, but all of our other partners. So like we're all in this boat together here, all of our partners. So the partners that we've signed up years ago, they don't want to put their program in jeopardy if we sign up a new fintech that does something crazy, because again, depending on the program, that's going to impact all of our partners.
I have a question that has come across from dealings that I've had with banks and with fintechs, and that is with a number of the new cloud cores that are being introduced in the marketplace. In some ways, it should make it easier for integration for fintechs and from the bank side. Have you guys have had any experiences one way or the other in working with the cloud cores?
Previously, what we've done at other banks I've worked at is created sort of a cloud layer that sits on top of our core. I think all of us bankers, when we hear about changing core, kind of freak out a little bit on the inside because it's a large project and it takes a lot of resources to build your own, like Keith did. But I think depending on how vast your banking services are, the cloud cores can be tough because they might not have everything you need yet. I think they're still kind of early. So to sort of bridge that gap, what I've seen happen is building a layer on top of the core that, is aggregating all of your core data, but is more accessible for fintechs and different banking as a service approaches to interact with.
And Grace, does that have to do at all with the aggregation services that are in the marketplace? I'm hearing, for example, Jack Henry has tied up with 3-4 different aggregation services that allow multiple banks to be able to ride those integration rails or APIs that have already been built.
Yes, that's exactly it. There's some that some of the cores have sponsored or partnered with, and then there's some independent sort of aggregation tools that you can leverage.
Interesting. And are you guys on the fintech side seeing a benefit at all in terms of working with those aggregation services?
We haven't done so yet. I will say, I do think as this space matures, it's just natural that it's not just going to be fintech to core. It's going to be fintech to core to CRM, to all sorts of stuff, often with the same data. And so the fintech will have an API that exposes certain data. Each of these systems will have an API that wants to consume data and it's not exactly right. And having a layer in the middle that allows kind of translation and aggregation into different systems makes a lot of sense. You see a lot of that in enterprise software in the non-banking world, where companies like MuleSoft are doing this kind of middleware layer of API routing. And I think that's going to become more common as people do want to have these things connected, but it doesn't make sense for every fintech to write to a direct integration to every core, every CRM, every marketing automation service. It just becomes almost impossible to do. So you can expose a generic API that can give consumer information, let's say, for a new account. And like, if it needs to get to 4 places, maybe we need somebody in the middle whose job is to connect the dots and where each bank can kind of manage. So I think that will probably become a more common approach, particularly among banks that are doing, working with a bunch of fintechs in different areas. It's probably not uncommon. There are some, like, I imagine, Keith, you guys are going to build your own stuff because like that's what you guys do, is to own that tech. But I think for many institutions that don't think of engineering as a core competency, having that layer of translation and aggregation for API calls in the middle is quite valuable.
Super. Let me ask you, as we're coming to the top of the hour, were there any questions by anyone else in the attendee ranks that want to throw a question out to the panel? I'm looking around. I don't see any hands raised or anybody off mute. So number one, I want to pull this section of the panel hour to a close. And I'm kind of going into my my next round, which is we have a component of our panels, which is a networking session. And that networking session is going to be a random selection of 5 to 7 people within the attendee ranks plus the panelists. And we set aside the last half hour or so to do 1 or 2 of these rounds and allow people to share information. And we'll give you a countdown the last minute or so before we swap people into maybe a second round, or at least pull you guys in for a conclusion. So I'm going to urge everyone to stick around for this next session of it. I do want to thank the New York League of Independent Bankers for partnering with us with NYPAY to bring the Fintech Imperative to everybody. I want to thank Jeffrey Alberts, and Jeff has been the moderator for this event, and our panelists, Keith Vander Leest from Cross River. We also have Jeff Keltner of Upstart and Grace Pace from Quantic Bank. Thank you for playing your role within this event. We've been able to hear from you guys, both the banker perspective as well as the fintech perspective in terms of partnering between community banks and fintechs and what it takes for that partnership to succeed. What I do want to also let everyone know is that we have the next online event that's going to be brought to everyone through NYPAY. And that topic will be the evolving world of crypto, changes and challenges. And the date you should hold aside is March 16th, 2022 from 6 to 7:30. We have the moderator for that event will be Tim Sloan, who's VP of Innovation at Mercator Advisory Group, and he's the senior analyst there. We also have panelists Ram Aluwalia, who's head of cryptocurrency and digital assets from Cross River, and we also have Alex Barrage, who's a partner at Davis Wright and Tremaine. A third panelist will be joining that group very soon. You'll be receiving a notification, and it'll be posted on the NYPAY website within the next couple of days to a week. What I want to do now is to turn this over to Bill. But before I do that, I see Brian Bunkowski has now raised his hand. So Brian, did you want to say something?
Yeah, I guess it's more just kind of a general question around the responsibility of transaction monitoring as to, you know, I understand banks have ultimate responsibility for the transaction monitoring, but how much of that is placed on the fintech and how much of that is placed on the bank?
So for Cross River, it depends on, we do OFAC, but then we do depend, and we also require the partner, the fintech, to do OFAC if applicable, and then they do the transaction monitoring. So what we do when we bring a partner on board, we underwrite them, and meaning we look at all of their policies and procedures and make sure that their transaction monitoring tools exist, and then that is their responsibility. And then we audit them occasionally to make sure that they are doing what their policies say they're doing.
Fair enough. Thanks.
Good answer, Keith. Works for us.
Grace, you want to make that 3?
Sounds good. What Keith said.
Again, this is Ron Mazursky. I'm the founder of NYPAY and also a board member. I do want to thank everybody for joining us. We're now going to move over to the networking session, which has turned out to be one of people's favorite sessions because it's a chance to just talk to the panelists and also talk to the moderator in maybe more of a one-on-one or one-on-five basis. We're going to go to Bill, our administrator, to run the networking session. And Bill, are there any instructions you want to give to the attendees and the panelists before you turn us over?
You're going to be assigned to a meeting room at random. If you want to switch rooms, just come on out. We'll put you into another one. We're going to take everybody out of the rooms at the end of the session at 7:30.
And just wanted to add one thing, Bill. We might do 2 sessions if we have enough time. We do 15-minute sessions, and that generally turns out to be enough. I do want to also mention that you guys could put your contact information or LinkedIn information in the chat and save it if you want for whoever else is putting their contact information in by clicking on the 3 dots in the chat area on the lower right-hand side, and it says save chat, and you can save whatever contact information people put in there. So thanks, and Bill, you can do your magic.
All right, here we go.
is it you believe and has Foreign Minister Lavrov agreed to meet Secretary Blinken as Blinken invited him to?
We have not yet.
All right, we're going to do one more set of breakout rooms and then for another 15 minutes, and then we'll call it a night.
Can the host enable my camera? All of
Yes, that would be nice as well.
Yes, we'll do.
Thank you.
I don't think it's been enabled. Has it?
Yeah. I'm having that same issue as well.
Because I didn't want to wear makeup, but you know, don't tell anybody.
David True.
Hey, how you doing, guys?
David True.
All right.
You're like next to me on the Brady Bunch thing. It's like cool.
Yeah, it's true. It's true. The Brady Bunch. God, I thought I've heard a long time. So,
Hey, David True, how come my camera's not working?
I don't know. I'm not the tech guy here.
Oh.
Bill has been turning people on in various sessions. So I do know he has some control.
Yeah, I tried to turn everybody back on. I had to shut some people down just for bandwidth reason. I tried to turn everybody back on.
Gotcha. Well, thanks everybody else for coming, for staying through the session. If anybody wants to put their contact information into the chat feature, just click on the chat button, type in your information, and then there's 3 dots on the lower right-hand side of the screen. Then you can click on Save the Chat, so you can save everybody's contact information. And when you close down your Zoom meeting, a box will appear with the chat information in it.
And thank you very, very much, everybody, for participating tonight. As Ron mentioned earlier, there will be the event on crypto next month. And then we've got one in the works for the month of April. We don't have a date yet on super apps because that seems to be a very hot topic. So just check back. If you signed into NYPAY, you're on the mailing list. We don't spam you, and you'll get notified of these different events coming up. I thank you for increasing the community here.
Thank you for a nice evening, Dave.
Yeah, thanks, David.
Thanks,
Thanks for
Bob.
organizing this. Nice meeting everyone.
Thanks, everybody.
Good to see you, Frank.
Adios.
Take care.